Welcome to Money Mondays with Melissa, where we talk about financial empowerment while exploring financial assistance available through local, state, and federal governments, each month with a diverse group of subject matter experts. Chicago, are you ready to get financially empowered? Well, we've got just what you need. Without further ado, give it up for your Chicago City Treasurer, Melissa Conyears-Ervin.
Good morning, everyone. Good afternoon, everyone. Welcome to Money Mondays with Melissa, featuring a partner, State Farm, who will be bringing a conversation on the Life Insurance 101, the benefits of life insurance by our agent, Darren Tillis. Again, thank you for joining Money Mondays. Feel free to drop all of your questions in the chat features, in your comment areas. And I'm going to push it over to Mr. Darren Tillis from State Farm.
Thank you very much. And good afternoon, everyone. Like she stated, my name is Darren Tillis, and I'm with State Farm Insurance. And I'm excited to be here today on Monday Mondays talking about life insurance. The topic today is Life Insurance 101, the living benefits of life insurance. And at State Farm, we sell over 50 plus products. However, the most important product that we sell and I enjoy talking about is life insurance. And I enjoy talking about life insurance because I truly believe that it is a misunderstood product. There are a lot of myths about the product, and people overall just don't understand the product. So today, we will not be able to go into everything about life insurance, but there are some key points as far as how life insurance have living benefits that can benefit you, that can benefit your family, and that can benefit everyone around you. So I encourage everybody to send in your questions, because we definitely want to field questions. But before we get started, we definitely have what I like to call as a disclaimer. The presentation today is not focused on products. This presentation will discuss life insurance benefits and strategies that can be used by the everyday consumer. Now, oftentimes people tend to think that when you talk about life insurance, it's only for the rich or it's only for people that have money. These strategies can be used by everyone. And I implore everyone to pay attention and basically forward in any questions that you have. So in getting started, before we get started, I want to just give you my information. If you want to take a screenshot of this, I am located on the west side of Chicago at 3830 West Roosevelt Road in Chicago. However, I am licensed to sell insurance throughout the state of Illinois. And within the next 3 to 6 months, we will be growing my agency so that we can cover states like Wisconsin, Indiana, and Iowa. This is my email address here. If you guys have any questions afterwards, or you guys have anything that you want to submit to me, submit that over to me. I've been with State Farm Insurance for 29 years. I've been a State Farm agent serving the North Lawndale community and the state of Illinois for actually 22 years. So I'm truly excited today. And I just want to thank Treasurer Melissa Conyears-Ervin and her team for inviting me out so that we could talk about this such important product in this life insurance. So before we get rolling, I want to kind of share some statistics with you regarding life insurance. Because it's a misunderstood product, oftentimes there are myths and misnomers going on out there about who has it, who owns it, who should own it. First of all, let's clear, everybody should own life insurance. Every living person should have a life insurance because, number one, if you prematurely pass away, or if you live long into your 80s, 90s, 100s, and you pass away, you don't want to leave the burden or responsibility to your loved ones to bury you. So that's why I encourage everybody should have life insurance. Now, most often people will say, well, should we buy it on young adults? The question is yes. As soon as your child is born, there's normally maybe a 15 or 30-day window where insurance companies want you to wait. As soon as that window is over, you want to purchase life insurance. I always encourage folks to purchase life insurance when you are young. And why is that? The reason I think you should purchase it, and the most important reason why you should purchase it when you're young, is because that is the time where it's the least expensive. And the older you get, the more expensive life insurance gets for you. So it's never too late to purchase it, but the best time to purchase it is when you're younger and when you're healthy. Because as we grow older, we tend to have problems with our health. We tend to have challenges. And sometimes those challenges we are insurable. However, the insurance will cost more. So some of these statistics that I'm going to go over with you guys, they were surprising to me. So this first statistic is 54% of Americans are insured. Now that's down from 2019, and this data is as of 2020. Now that means that 46% of Americans do not have any type of insurance. So the burden to make sure that you take care of their burial needs and any responsibilities that they have behind, that is dependent on their loved ones. So that's 46% of Americans who don't have insurance. One of the main questions that I think about when I'm watching TV or I hear of a loved one or a friend or a well-known star pass away, the first thing I always question is, did they have life insurance? Because oftentimes we tend to think that because a person is rich and wealthy, well, they may not need life insurance. Their need for life insurance is totally different than the common everyday person. But one question I always have is, did they have life insurance? I'm always thinking about life insurance because I understand it's one of the number one legacy building tools that are out there. Secondly, there was a study that was released, a barometer study that was released back in 2021, and it revealed that majority of Black Americans own life insurance at 56%, and that's up 3 percentage points from 2020. Now, one of the main reasons for that, and most people may know, is because of COVID. COVID changed the life insurance paradigm for a number of different reasons, because it had people facing their mortality saying, you know what, I want to make sure that my loved ones are taken care of. I also want to make sure that I leave a legacy for my family. So those numbers went up about 3 to 5 points since COVID. This next statistic is always interesting to me because it's one of the main reasons why people never want to have a conversation about life insurance. And that is, many individuals say that it's too expensive. Well, a lot of us like to go out, and we like to go out and have fine dining maybe once or twice a month. Oftentimes we eat out every day at lunch. And oh, by the way, many of us love our daily dose of Starbucks. If you took maybe 1 day or 2 days a week of Starbucks and you added it up, it's the cost of a life insurance policy that you can purchase. So it doesn't cost you anything to have a conversation about life insurance. And that's the first step. I don't think folks should think about how expensive it is, but I think most folks should tend to think about, let's have the conversation, find out just how affordable it is. Here's some other statistics that I was, quite frankly, they startled me, because oftentimes we tend to think that a lot of women-led households, they are responsible for not only themselves, but they are responsible for loved ones like their moms and their dads and taking care of the loved ones. And I've seen through my agency that oftentimes women are my primary candidates for life insurance, because they're responsible for the burden of the whole entire family if it's a single family household. So when I saw this statistic, it shows that 53% of men over 46% of women have life insurance. And that was interesting to me. But once I processed it, men who are the head of the household, who are responsible for their families, who want to make sure that their loved ones are taken care of. This 53% of men are the responsible ones who want to make sure that, hey, if I own a home, if I have certain assets that I want protected, I need to make sure that I go out and I purchase life insurance so that in the event of my untimely death, my assets and my family can be covered. So for me, that was an interesting statistic that I found. The next statistic may startle everyone, and it was somewhat surprising to me. As an African-American male, and I sell insurance in the African-American community, sometimes it's a challenge to have conversation with folks within my community, to have them discuss life insurance because of the myths, the misnomers, and the misunderstanding around life insurance. And it can be very, very challenging to approach this topic. However, if you look at the data, we are leading among race and other ethnicities in the purchase of life insurance by coverage. 55% of African Americans purchase life insurance. A close second is the Asian community at 52%. And then we have the white community. And then we also have the Hispanic community. Now, ideally, I think these numbers should be up, and all of these numbers, I feel they're fairly low amongst all races, and they should be somewhere in the realm of between 80 and 90%. This is extremely low, but I'm happy to know that African Americans are beyond or close to a little bit above that average or beyond that average. So kudos, but this number should be much better when you consider that everybody has something that they're trying to protect. They either should be paying for their burials or they should be trying to protect their loved ones. The next slide here talks about life insurance ownership. Now, over the last 11 years, we were at a peak in 2011. And if you think about maybe what was going on in 2011, a lot of things were going on in 2011. That was post a major mortgage recession where people were losing their homes and people were losing their jobs. And that was around the time where people probably felt like they needed more life insurance. And so this chart really shows you how there's kind of been like this up and down trend where life insurance is owned and then it's not owned and then it's owned again. But over the last 5 years, it has been trending downward. And the fact that it's trending downward is not good for families that folks are leaving behind. So I enjoy talking about those statistics, and it gives you kind of like a bird's eye view of what's going on in life insurance. But now I kind of want to talk to folks about just life insurance in general. Everybody talks about life insurance, but when you ask them, you say, hey, what type of life insurance you have? Most folks do not know what type of life insurance policy they have. One thing is important for them is they feel like, hey, I purchased life insurance. I don't need to know what type of life insurance I have. You should know what type of life insurance, because while there's various types of life insurance, your life insurance should fit your need, because my life insurance is different from me. Your life insurance needs are different from you. And the next person's life insurance is different from you. So as an insurance professional, when I'm having a conversation with somebody, my conversation is focused on them and their actual needs that they have to make sure that they have the proper life insurance for them and their family. And so let's get into talking about the types of life insurance that are out there and that are available for you. And this, regardless of what company you go to, it is important to know the different types of life insurance policy. So the first type of life insurance policy that we have is called term life insurance policy. Now, when you think of a term, you want to think of like the President of the United States. The President of the United States has a 4-year term. At the end of his 4 years, he has to run for office again and hopefully get reelected. So he has a 4-year term. Well, term insurance normally comes in increments of 10 years, 20 years, 30 years, and sometimes 40 years for some companies. And term insurance is short for temporary insurance. Term insurance is when you are trying to fulfill a temporary need. So for example, if you have a young child and you want to make sure that, hey, you want to make sure he has coverage for the first 30 years of his life, so that if anything goes wrong, where if he goes away to college and you prematurely pass away, you want to make sure that you have enough coverage left so that anyone can take care of him, then you would purchase a term policy. The other benefit of having a term policy is it allows you to protect not only your assets, but if you had a business relationship, if you had a business partner and you guys went into business together and you said, okay, this business is going to last 20 or 30 years. However, I want to protect my interest in the business. So I'm going to make sure that I have life insurance so that in the event of my untimely death, one of my family members, loved ones, or somebody who's a part of my estate can buy my part of the business. And what you can do is you can purchase a term insurance policy, and then the benefit of your policy and whoever you want to buy your business, they can utilize that policy to purchase your business. Another key reason to buy term insurance, and one of the ways in which term insurance is used, is for mortgage life insurance. You buy a home and you have a mortgage on the home for 30 years. Well, the mortgage company requires you to have homeowners insurance because they want to make sure that the asset is protected. But no one is requiring that you protect that asset in the event of your death so you can transfer your wealth over and it can be a part of your legacy. No one requires you to do that. But by purchasing a term policy, it allows you to transfer that wealth to the next generation and it can be paid for. The most important thing about a term life policy, it is relatively inexpensive when you compare it to all the other policies that I have listed here. And when I mean inexpensive, I didn't say cheap, I meant inexpensive. And when I mean inexpensive, that means that you can purchase more coverage for less money than you can the other policies here, but it's for a temporary period. So now those are all the pros that I gave you of having term insurance. Some of the cons of having term insurance is that it is only going to insure you for the temporary time period. It's only going to insure you for 10 years, 20 years, 30 years, or 40 years. At the end of the term, you have to purchase more insurance. So if you bought a 30-year term when you were 20 and it's over when you turn 50, now when you turn 50, you're going to have to buy new insurance again, and it's at your age of 50. And it also takes into consideration any medical issues that you have. It takes in any medical conditions that you have. So you may have paid for a term policy for 30 years, $20 a month. When you turn 50, that same policy may be $60, $70, $80 a month. So you want to be mindful of that. The next thing is term policies do not build what's called cash value. And so the old terminology of cash value is when we've heard our grandparents or our parents or either some of our friends and loved ones say that they borrowed money from their policy. Well, with a term policy, you cannot borrow money from a term policy. Hence the reason why it's so inexpensive. And the death benefit stays the same. So if you buy a $500,000 policy, at the time of your death, it's going to pay out $500,000. It's not going to increase and it's not going to decrease. There are also type of terms where the premium increased. And so you have terms that every 5, every 6, every 7 years, the term rate that you're paying increases. So anytime you're looking at a term policy, you want to understand, do I have an increasing term? Do I have a decreasing term? That means, is the price going up or is the coverage going down? So those are some of the questions that you may want to have. Anybody that has life insurance out there and don't know what they have, I encourage you to call your insurance agent now and say, hey, sit down and have a discussion about your needs and how your policy addresses your needs. The next type of life insurance policy that we have up here is called a whole life policy. Whole life is one of my favorite policies, and these are the type of policies that are owned by banks. When banks have large reserves, they have to put their money they have to find somewhere for their money to be safe and to grow. And one of them is a whole life policy. Now, a whole life policy is just that. It covers you for your whole entire life until you die. The great thing about a whole life policy is that it builds up cash value. And I'll discuss with you guys later the advantages of cash value. Also, some whole life policies have a fixed death benefit. So if you purchase a whole life policy for $100,000, and I'm sorry, if you purchase a whole life policy and the death benefit is $100,000, that death benefit may never change. It'll just stay $100,000. There are also some whole life policies out there where the death benefit will change. So you may start out with a policy that has a death benefit of $100,000. And if you keep it over 10 or 20 years, that may change. So some are fixed and some are flexible. So whole life policies are considered like permanent policies. So like I talked about the term being temporary, a whole life policy is more so a permanent policy. So depending on your needs, your strategy, and what you're attempting to do with your legacy and your family, you always want to understand, do you need a term or a permanent policy? Another type of permanent policy is called a universal policy. And this is similar to a whole life policy, but there's more flexibility that's built into this policy. The flexibility is built in as a result of you could change your payment amount for this policy over time. You could also increase your death benefit. And the other great feature about this policy is it does have cash value that you can build up. The other type of permanent policy is called a variable policy. Now, the one thing with this policy is it deals in the market. And when I say the market, it deals in the financial market. So you may have a variable policy that's being backed by a mutual fund or it's being backed by some particular interest. And this is for the lifetime of your policy. The other great thing about it, it does offer flexibility where you can adjust the policy to your needs. And the most important thing is it does have cash value. Cash value, cash value, cash value. If you don't remember anything I say today, you want to remember cash value. And finally, we have what's called a burial policy. Burial policies are policies that do just that. They just provide enough death benefit for burials. And that death benefit could be anywhere from between $5,000 and $20,000. The average cost of a funeral is about between $10,000 and $15,000. With other bells and whistles, you're probably going to be in the $20,000, $25,000 range. Anybody that's normally looking for a burial policy is probably looking for a burial policy for their mother or their dad who has reached an age and they just want to make sure that they pay for their funeral expenses. Oftentimes you have older folks who say, hey, I just want a burial policy just to take care of my burial. These policies also have what's called cash value. And the price that, and this is the price that you pay is the same price that you pay up until 99 or 100. So you basically pay it for the rest of your life. And also this policy is considered to be a fixed policy. That means the death benefit of this policy pretty much stays the same for the rest of your life. And I encourage if you're watching, we thank you for watching us. And I encourage you to send in any questions or any questions or comments that you do have. So the primary focus of this show and for me is oftentimes families are often thinking about life insurance because they want to make sure that they're protected during the time of somebody's death. And that is one of the main reasons why people purchase life insurance. And it is also one of the reasons why people don't like to talk about life insurance, because they feel like, hey, if I start talking about life insurance, if I buy some life insurance, something may happen to me. And those are understanding ways to think about it. However, I think we should always be having a conversation about life insurance. But in addition to your strategy about making sure that your items are protected, it is important that you focus on the living benefits for life insurance. And so most people say, well, life insurance is for the dead. No, life insurance covers people that die. However, the primary focus is the living benefits of life insurance. How can you, who is the beneficiary of that life insurance policy, benefit from that policy? How can you, who purchased that policy on yourself, benefit from the living benefits that exist within that policy? You know, back in the day, 20, 30, and maybe 40 years ago, you had life insurance salesmen who came to your door, and they went door to door to door to door, and they were primarily focused on selling you life insurance to bury you. just selling life insurance to bury you. But they never sold life insurance for the living benefits of the life insurance. So some of the stuff that I'm going to discuss with you today regarding the living benefits of life insurance, you may have never heard of them before, and it may sound strange. And traditionally, most insurance agents are not going to have the conversation with you about the living benefits of life insurance. Life insurance should always be a part of your overall legacy strategy. And what do I mean? When you think about your legacy, you purchase a home and one day you want to leave that home to somebody. You have a retirement income because one day you want to retire. And those are all part of your long-term legacy strategy. Well, life insurance has living benefits that can be a part of your living strategy, but you have to have a conversation with a insurance agent or someone who understands the product and who is licensed to sell the product. So the first thing I want to talk about is the living benefits, and it comes in the form of a particular product that all insurance companies, for the most part, they may offer them. And it's called a guaranteed issue life insurance policy. It's called a guaranteed issue life insurance policy. Now, people oftentimes have all of their misunderstandings about life insurance. And when you use a term that's called guaranteed, most people are taken aback because they feel like, wow, guaranteed, nothing's guaranteed. And you're absolutely right. Nothing is guaranteed. However, insurance companies have this guaranteed issue life insurance policy because it's going to be guaranteed that anybody who wants this policy can get it. Now, this type of life insurance policy has minimal benefits. And when I say minimal benefits, they have minimal death benefits. So this policy may be a $5,000, $10,000, but no more than a $20,000 life insurance policy. Okay. And this is the type of policy that most folks are going to get on those loved ones who have waited too late to purchase life insurance, and now they have ailments or some type of disease or something going on where their life expectancy may be less than 5, 10, 20 years, and they need to get a life insurance policy. The great thing about this type of policy is they ask no questions. No questions are going to be asked. No questions. So they don't ask if you smoke. They don't ask if you drink. They don't ask if you're on drugs. They don't ask if you've been in a hospital. They don't ask if you've ever had surgery. They don't ask if you have high blood pressure. And they don't ask if you are diabetic. They don't ask if you've ever had a heart disease. They don't ask any questions. So we have people out there who are living from day to day, but they don't know that, and they have ailments and they think they're uninsurable. And there is a product out there for them that can make sure they're insured. Now, it's not going to be able to protect them to the degree of other policies where they have higher death benefits, but it will be able to protect them. And the other great aspect of this policy is you don't have to take any medical exams. Now, the other types of policies that I mentioned to you, like a term policy, a whole life policy, a universal life policy, and a variable life policy, you have to take a medical exam. And they take your biomeds. They have a nurse, CNA, a nurse or nurse practitioner come out to your home, or they have you go out to a facility, and they get all your medical data. And if there's anything that you convey to them or communicate to them about your medical history, they will order your medical records. Okay. With this guarantee issue life insurance policy, no one's going to order your medical records, and there are no questions asked. And so if anybody was presenting this to me, I would say, this sounds too good to be true. And my uncle would always say, if it sounds too good to be true, you need to ask more questions. So this particular policy, anybody can get it. However, with this policy, when you purchase this policy, there's normally a 2-year contestability period. Okay? There's a 2-year contestability period. And how it works is this. If you pass away within the first 2 years of purchasing this policy, most companies are going to they're going to refund all of your money. They're going to refund all of your money to you. Okay. No questions asked, no issues. They're going to give you all of your money. The other great thing is if you do not pass away in the first 2 years of purchasing this policy is in full effect and they can never take it away from you. So an example is this. I have a policy like this when it first came out on my dad. And my dad is roughly in his 70s. And I purchased this policy and I purchased it in January of this year. So once my dad lives for 2 years, and if he doesn't pass away, then this policy is in full effect and they can never come back and take it away. They can't contest it. The dollar amount that I purchased on my dad, he is going to be covered. Now, if something happens to my dad within the first 2 years, then they're going to give me all my money back. And I understand that. And that's what I expect. But my goal is for him, in addition to any other policies he has on himself, if I'm the primary caretaker for him, I want to make sure that I have life insurance. In this particular life insurance, in this particular case, this life insurance policy, it will pay out after 2 years. After 2 years. It will not pay out within the first 2 years. It will not pay out within the first 2 years. This is a great policy for you to get for older folks who are diabetic, high blood pressure, heart conditions, who have major medical challenges. The only thing is that they must live past 2 years. I talked to you earlier about multiple types of life insurance policies. And one of my favorite policies is a whole life policy. And that is the reason I like a whole life policy, because I love the living benefits of a whole life policy. And I love the living benefits of a whole life policy because it has what's called cash value. Now, there's a specific type of whole life policy that's available out there with multiple companies, and it's called paid up life insurance. And basically what paid up life insurance is this. I know oftentimes people talk to you about paying for life insurance for the rest of your life. There are some people who had door-to-door salesmen back 40 years ago who are still paying for a $5,000 policy, and they may have paid up the policy already because they've been paying for 40 years, and that same doorman is probably coming to their door, or now they're being billed. The great thing about a paid up life policy is it enables you to keep your whole life insurance policy in force without continue to pay the premiums. And what that is, in simple terms, is this. You buy a life insurance policy, and that policy, and you buy a policy that you can pay off in 10, 15, or 20 years. So it's similar to paying off your car. Once you pay off your car in 5, 7, 8 years, you own the car. You don't have to make any more payments. Well, that's the same thing with a paid up life insurance policy. Once you buy that paid up policy and you pay it off in 10 or 15 or 20 years, you do not have to make any more payments on a life insurance policy. And when you die, it's going to pay off because you have paid it up. So versus paying for a life insurance policy for 10, 15, 20, 30, 40 years, you can pay 10, 15, or 20 years and have it paid up, and you own the policy. The other great feature about a paid up life insurance policy is that it has cash value. And even when you stop paying, the cash value policy continues to grow. It continues to grow. One of the best policies that are out there. And I encourage everybody to get them for their children. The next living benefit of life insurance is we oftentimes hear about 401ks, 403bs, and we hear about pensions. However, we never hear about anybody using life insurance as a strategy to supplement their income. Now, I spoke before and I told you some of the stuff that I'm going to tell you, you may never heard it before, and you may say, no, I want to hear more about it. I'll give you my information later if you guys want to call me, email me, and we can talk about more questions. But life insurance can be used as a supplemental retirement income. That means what you would do is you would use the cash value in your life insurance policy for retirement income. And so most people are probably saying, what? I can use my life insurance cash value for retirement income? Yes. Any cash value that you have built up in a policy, you can use it for whatever needs that you have. The goal is to make sure that you buy a policy. And when you sit down and meet with a life insurance professional, they can guide you on how to prepare to use your life insurance as supplemental income in your retirement. So what do I mean by supplemental income? So if a person has a pension and they have a government job and their pension pays them $7,000 when they retire, they may have also went out and purchased a deferred comp plan, or they may have a 403B plan. And the 403B plan, it may pay you $1,000, an extra $1,000 a month, and your deferred comp may give you $2,000 a month. So right now you're sitting at $10,000. And so for some people that may be enough money, and other folks that may not be enough money. So if you have a life insurance policy, the cash value that you have in that policy, you can also take distributions from that policy in the form of monies for yourself to use. And so what I put together here is a simple example that I want to show you of how somebody can use, and I hope you guys can see it, and I hope it's not too small on the screen. This is a simple example of a person, and I have a female, age 25 years old. So we're going to go back. Let's imagine that she purchased this policy when she was 25 years old, and she is using the strategy of using her life insurance to help with her retirement income. So she purchased this policy, and she's purchasing, and this is a 20-pay life. That means in 20 years, this policy is going to be paid up. So when she's 45, she will not have to make any more payments to this policy. And what did I mention to you before? This particular policy will continue to grow its cash value, and also the death benefit will grow. So, and I have John Doe here, but we'll call her Jane Doe. So Jane Doe purchased the policy at age 25. She's a female, and she purchased a 20-pay life insurance policy. That means it's going to be paid up when she is 45. So at age 45, she's done paying for this policy. Now, the death benefit of this policy initially starts out at $595,944. That's how much the death benefit is. But as time grows, the death benefit of this policy grows. And so how could she use this policy to help her with her retirement income? So let's say that Jane Doe, and right here it says end of year 40, and then we have her age as being 65. So she has paid for this policy for 20 years. She's done paying for it. And now she's just waiting to retire. So once she gets ready to retire, let's say at age 65, she has what's called cash value that's built up into this policy. And so first we want to go here. Her cash value amount is $585,987. That's how much money that she has. Excuse me one second. That's how much money that she has built up into her policy. That means when she turns 65 years old, she could have a pension, she could have a 403B, and she could have a deferred comp. But now she has $585,987 that she can start taking monthly amounts from this policy every month. So if she wants to take $2,000 a month, it decreases this amount. But before she even takes the $585,000, she has what's called dividends. And that's $199,662 that she can take. And this all can supplement her retirement. So you have some folks who work in government who say, I have the age, but I don't have the number of years with my job to retire. So they may say, I have the age, but I don't have the number of years. So that's for somebody who starts their government job maybe at age 45 or 50. And so they have the age, they turn 65, but they don't have the years with their job. So a person like that is oftentimes some government jobs say, well, you can retire early if you buy back your time. Well, this person could also use this money to buy back some time. So she could take whatever she wants out of this $585,000, $987, and buy back some of her time. And so this is a simple version of me explaining. And if I sat in front of you, this would be based on your individual needs. But this is a way where a person can use life insurance to help them with retirement. The next slide that I have for you guys is you can also use life insurance to create college funds for your children or your grandchildren. Oftentimes, like I mentioned before, people only purchase life insurance to protect their assets. But life insurance can be an overall strategy for retirement and for your child's education. So permanent life insurance includes a savings feature that can be used for college expenses. And that savings feature is cash value. So in the next example I'm going to give you, and I'm using a female that's age 0. So let's say someone has a daughter, and when she's born after the 30-day period, they go and they buy a life insurance policy on her. Now, they buy a life insurance policy for her, and this life insurance policy, the death benefit is $826,612. And they buy it when she is born. Now, this is what's called a 15-pay policy. That means that this policy is going to be paid up in 15 years. So after the 15 year of paying this policy, they will not have to make any payments. And as you can see along the side here, that potential death benefit for that person is going to continue to increase. Now, if this person is buying this policy as a strategy for covering college expenses for that particular child, we want to go over here and see, well, okay, normally kids go to college when they're 18 or 19 years old. So let's start here. When this kid is 18, when this young lady is 18 years old, she is going to have, that parent would have $220,772 that are built up into this policy. And so if this child does not receive a scholarship to go to school for free, now that parent can take this $220,772 and use it for college. Now you may say, hey, what about those other plans that I hear about, the Save Up program, the Bright Star program, the 529 program? Those are all great programs that you can put your money in. But oftentimes those programs have stipulations on what you should do with your money and you can do with your money. By using life insurance as a strategy to fund your child's education, you determine what you want to do with the $220,772. You could take $30,000 and pay for her first year of college. You can take another $15,000 and buy her a used car. You could take another $10,000 and buy her clothes. You can do whatever you want with this money. There aren't any stipulations on what you can do because it's your money, and you are basically taking this policy and you're creating the strategy. And this strategy is primarily for you and your loved ones, where you want to make sure that you take an untraditional approach to paying for your child's college education. The main reasons why I love whole life insurance policy is because they do have cash value. And the major living benefit of owning a life insurance policy and having cash value is that you can use that cash value for anything that you want to use it for. So an example is I had a client who was looking to purchase, they actually purchased a home, and they were getting work done to the home and they ran out of money because they were getting it rehab. And so they needed money to float them while they were reapplying for another construction loan to renovate the property. Well, this particular person called me, and at the time, they had a very small policy, and they only had $10,000 in the policy. And they were telling me about the dilemma that they were in. I said, hey, you know what? You have this policy, and you can get the money out of this policy. That particular person got the money out of the policy, continued to try to find refinancing products. She ended up finding a refinance product, but she was able to use the money to float her until she was able to find that particular product. So you can use your life insurance while you're alive. The value of the policy can be leveraged to access some or all of the money before you die. And that's the number one reason. This is a part of your strategy. If you need to use the money in the future, you buy the policy. You can buy it at a young age, you can buy it at a middle age, or you can buy it at an older age. But know that the monies that you're going to be putting into the policy, you can use. And so for the next example that I have, what I'm going to use is I'm going to use an older individual, but I'm going to use a similar type of policy, which is a paid up policy, and it's the same thought process. At age 45, this particular person decides that they want to start adding extra money. They want to purchase a life insurance policy because it's in addition to everything else that they have going on, and it's their forced way of saving money. Well, this particular person says, okay, she is a female, they're 45 years old, and they go out and purchase a 20-pay life. And what a 20-pay life is, that means that in 20 years it's going to be paid up, you will own it, and you'll never have to pay life insurance again. What age 45 insurance is going to cost a little bit more, and because of your age, you're not going to get as much as the younger folks are, but you can purchase life insurance. And so this particular person is going to be purchasing a policy for $172,977. This person will be using their life insurance as a part of their overall long-term strategy so that they want to be able to have access to additional monies in the future. And they're only going to have a limited amount of time to pay for this particular policy. So as you see here, this person is only going to pay for this policy for the first 20 years. And after the 20th year, they're not going to be making any payments anymore. And so once they get done with making the payments, you can see over here that these numbers are continuing to grow. And the column that we want to focus on is the cash surrender value policy. So this person is 45. Let's say that at age 65, they may be still working, but they're working less and they want to start traveling. Well, all the trips that they may want to go to, they've never had an opportunity to go to because they've been working so hard. Now they have the opportunity to do it. And so now this particular person has $139,983 in this policy where they can use these resources for whatever they want. If they have a dream car that they want to purchase, if they want to purchase a Corvette, a convertible Corvette, they can do that. If they want to go on a trip to South Africa and take their family on a trip to South Africa, they can do that. If they want to go on a cruise with their friends, they can use these resources for whatever they want to use the resources for. And those are the living benefits of just owning an insurance policy. And so I totally think that I'm a full proponent of folks buying life insurance policies so they can make sure that they protect their family and they preserve their legacy. But I also think that we need to start changing our mindset and understanding that the way that money grows in a life insurance policy, there are a limited amount of products out there that it can grow in. And the great thing about a life insurance product is that this money that's growing in this particular policy is free from the market. Now, there's some other great features in this particular product that I can show you, and our time today won't necessarily allow me to do that. But I hope you guys understand the overall concept of using life insurance as a living benefit, because traditionally our families have been taught just to buy life insurance so that when we die. But I think we need to change how we look at it, and we need to start buying life insurance so while we're living, because the living benefits can truly help enhance your life, your quality of life, and the things that you do. So that is it for my presentation. I do have time. I think I have time for questions, if there are any questions.
And thank you so much, Mr. Tillis. We're going to give the viewers some time to add their questions to the chat feature. If you are interested in asking any questions to Darren at this time,
I know some good information
drop them in the chat.
Do we have questions?
I see a few coming through now, actually. Hold on 1 minute. Oh, sorry. I think that was a mistake, guys. There you go. Yeah. And so you got a few things coming through the chat now.
I apologize. How do I get to them?
So from Sharice Bradford, in regards to the 2-year policy, are you able to share additional information about the 2-year policy that you mentioned?
So for the 2-year policy, that policy, I guess I would want to know for Sharice what type of additional information she would want to know. And I can give you my slide, and you can give me a call. But for that particular, give me a call or shoot me an email, and I can provide some additional information. But that's about the guarantee issue final expense policy, and that's the policy where a person needs to live within 2 years, and then that policy will pay out.
Thank you. And also, if it's possible, Mr. Tillis, we made a screenshot of the review of the different policies that we can share with our viewers after this conversation. And all of the viewers, please just take some time. You can take down an email address, phone number in order to access Mr. Tillis if you have any questions offline after this webinar. So we'll give about 2 to 3 more minutes for any additional questions before we close it up.
I left them speechless.
Okay, this is perfect. And you know, it's a sensitive conversation every now and then. So we're hoping that all of our viewers are taking down information. We'll also share it in email and to all of those who have signed up for the webinar as well. Again, Mr. Tillis, we really appreciate you taking the time to speak to our residents in Chicago about the importance of life insurance, and definitely gave me a lot of information that I needed today. So thank you so much. And
no problem. I want to thank you guys in the office for having me. Great job on Money Mondays. I think this is an exceptional platform to provide folks with information, and I think it's desperately needed. So thank you.
Thank you, Mr. Tillis. And this will be rebroadcasted on our YouTube channels. You can check us out at ChicagoCityTreasurer.com. Money Mondays with Melissa is on the front cover of our homepage, so you can get access to all of the rebroadcasting of every Money Mondays conversation that has happened here at the City Treasurer's office. And with that being said, thank you so much for attending Money Mondays. Mr. Tillis, you have a great day, and we will see you later, Chicago. Thank you.
Thank you, Chicago. Goodbye.
Thank you for tuning in to Money Mondays with Melissa. We hope you enjoyed today's session and found value in the topic of discussion. Follow Chicago City Treasurer on Facebook, Twitter, Instagram, and LinkedIn to stay on top of all upcoming events. Remember, if you have any questions, feel free to reach out to the Chicago Treasurer's office at 312-744-3356 or visit www.chicagocitytreasurer.com. We'll see you next time for Money Mondays with Melissa.